Hi guys, I thought I'd just run through the different sessions, both the Asian, the London, New York session, um, for this past week, beginning on September or 16th of September, Monday the 16th of September. Before I do that, I just want to show you that we have a new zone trader. Here it is here. What it does now, it signals an arrow on the chart. It also gives you the signals in history, which allows us then to check our settings, see if we need to make adjustments. Currently the zone trader is optimized for the Asian session and the US-Japanese currency pair. Maybe for other currency pairs it needs to be slightly adjusted. It may also need to be adjusted during the different sessions because of volatility, etc. The other thing that Zone Trader now does, it automatically draws the impulse wave for us to give us our stop at 85. It automatically goes to the swing high in this case, determined by the zigzag. It automatically brings the 61 to the fractal, and of course then there's our 0, which is target 1, sorry, and down here it'll have 38, which is target 2. So it does this all automatically for us. So all we need to look at is price action. Okay, now Zone Trader is not a black box. It's not designed to do that. It's designed to give us an edge, give us a reason to enter the market. I think the least you're in the market, the better it is to your pocket, because the market, the Forex market, decides what it's going to give and what it's going to take. So, we need to be careful. As you probably know, not too many traders actually make money in the markets. Most people lose their money. So we want to be part of that group that makes money in the market. And to do that, we need to be careful. As scalpers, we need to get in quick and get out quickly. What Zone Trader does for us, it shows us that our indicators are in a particular buy or sell situation. So all we need to do now is just to decide whether we're going to enter the market or not. Not every signal that Zone Trader gives us is going to be a entry that we want to get into. We need to be able to look at price action, look at what the market's actually doing. We don't want to find ourselves in a counter trend situation, because many times a counter trend situation is just a retrace and it goes back to the direction it was heading. So those are our losing trades. Also, let me just mention our money management, or money management that I use. I risk 3% of my account and calculate using an 8 pip stop for my lot size. Okay, 8 pip is not a hard stop. Once I'm in the trade, my stop is determined by the 85.4. Sometimes that might be a -3 situation, sometimes a -5, and sometimes that might even be a -9 or 10. So be aware of that. I don't have a hard stop. You might decide that you do have a hard stop. Maybe you've got a hard stop at 5 or 6. That's up to yourself. Okay, all Zone Trader does is gives you what I believe an edge. You have to manage your trade. It's up to you. You've got to manage your trade. You've got to know how to trade to make money in the market. There's no such thing as a robot that's going to do this for you. You have to learn to trade yourself. You have to put time into the charts yourself so that you can read what's going on by price action. Indicators, doesn't matter which one it is, only deal in history. Okay, and by looking back at history, we can make a calculated calculated guess at what's going to happen in the future. So again, all Zone Trader does is gives us an edge. That's all it does. So back to my money management. Money management, for me then 12 pips is 5%. And that's what my daily goal is, 5%. Is my 12 pips hard and fast? No, it's not. Sometimes if I've got 9 pips, that might be enough for me. Or 10 pips, that might be enough for me. And I'll call it quits for the day. Other times, I've had times during this last week or the week before where I've had 17 or even 18 pips, because that's how it's worked out for me, and that's just a bonus. Okay, so I'm generally aiming for 5%. If I can average 4% over a month, boy, that would be very good, wouldn't it? 4% a day. I think 4%. I would double it. I'd double my account every 20 days, or maybe a bit less. I know at 5%, I double my account every 15 days. So pretty good going if we can do that. You can also see, let me just wipe this here away, that the aim of this system is to build an account, If you had $20,000, you made 2%, that would be a day, that would be a nice healthy income per day. Using our money management system, 2% would mean, well, if 3% is 8 pips, then 2% is somewhere around 6 pips, which would be pretty good income. 4 pips would be 1.5%. I haven't even looked at the idea that you could even, once you have the system down pat and you know what you're doing and you are disciplined in taking the best setups, you might want to risk 5% of your account, which means then with an 8 pip stop, which would then mean that every 8 pips is 5% to your account. Those are just things that you need to decide yourself as a trader. I think that the biggest failure that we have as traders is we don't have patience, no patience, and no discipline. Discipline to enter a trade. When we should enter a trade, sometimes we procrastinate too long and we end up giving the market several pips before we decide to enter in. And I don't know about you, I've done it in the past. I think, oh, well, I just hang on, and then the price takes off, like say, this could be this, like in this case here, for instance, this big long bar here, because that was actually a signal here. Hang on, and then suddenly decide to enter in, and because this bar moves very quickly, you find that by the time your broker lets you in, you're way down here, and 9 times out of 10 what happens, it's the end of the run, and up it goes that way. Whereas if you had have entered here, you would have had all this room to decide what you were going to do, whether you were going to bring your break even down. You understand what I'm saying? So we need to learn to be disciplined and have patience, because we're not going to get a lot of trading opportunities. We're going to get a very few number of signals during a session. So these are the things that are very important. Okay, other thing is, while I'm here, I might as well explain it. We believe in pip accumulation. We want to make sure that, or try to endeavor that our equity ball stays the same size or larger. We're quite happy to look like this. We do not like this kind of setup. Okay, a lot of trading systems you see, they're up, down, up, down, up, down. We don't want that. All right, this is just all bad on the emotions. We want to be consistent. So we're quite happy to make a couple of pips, couple of pips, couple of pips, and climb that way. Okay? I think it's, what is it? The turtle wins the race. Anyway, enough of that. If you have any questions, just let me know. I just want to show you what, let me go back, there we go. Now, I trade the Asian session and only the Asian session. I don't trade any other sessions. Now, here it is, this is 2 a.m. on my charts. I think my charts are New York close, 000. Okay, so 2 a.m. that's the Tokyo Open, which is 9 a.m. for me, Australian Eastern Standard Time. So you can work that out yourself where you are, but 9 a.m. Australian Eastern Standard Time is 2 a.m. on my charts, which is the Tokyo Open. So what I do is I watch for a signal. Sometimes I will look at maybe a half hour or so before the Tokyo Open, but only if the spread has settled down. I like my spread to be no more than about a 7, a plus 7.7. Okay, that's what I like. Any more than that, I don't like, because I've got to add 0.5 for my commission as well. So generally I find that as we enter into the Asian session, it'll settle down to about 0.6, 0.7, and then within an hour or so it can come down to about, you know, the 0.2 to 0.4 range, which is where I really like it to be. You know, I think as scalpers we really don't want to get much more than 1.2 spread. Okay. Anyway, so here we go. Monday the 16th of September. And the first signal is here at 4:32. So we've gone 2.5 hours. So this is about patience and discipline. Patience and discipline. Most important. 2.5 hours, we've twiddled our thumbs. Then suddenly we get a signal, we get the arrow, we get the straws up. I think that's, I don't think I mentioned to you that what Zone Trader does now as an option, it'll actually warn you that a trade is coming up. It'll begin to show you this arrow as this bar here either crosses the 1, 2, 3, shows a 1, 2, 3, which is that one, or the breakout. So that's the 1, 2, 3 arrow. That's the breakout arrow. Begins to form, begins to cross here. It will begin to show this arrow. You know, when it, obviously when it retraces back over, this arrow disappears, but as it has crossed over, it'll actually show the arrow warning you that there is a trade, a possible trade coming up. Now, the important thing is that as we are waiting for a trade, we already know that we're in a strong downtrend. We also know, and I don't think I've mentioned this before, this line here is my 40 Cajun. Wish that was 40K, 40,000, it's my 40 Cajun. Okay? What I like to do, or what I like to see, is I like to see my price react with this, because I don't want to be caught at the end of a run. Let me explain what I mean by that. Say that, for instance, this one here had been a signal. See, it nowhere did it react with, nowhere did it react with my 40 Cajun. Before this here would be a signal for me. I'd like to see price come up, react, and then come down. As I said, I'm trying to avoid getting caught at the bottom of a run. While I mentioned this here, I should mention this while I'm here. Obviously, when we are at the crossing of a trend, as we can see here, this is not as important. It's only as we come down in the run that we like to see some reaction with the 40. Okay, I hope I've made that clear. Anyway, so here we have a signal. Price action looks good. We're in a strong downtrend. Our slope is in a strong downtrend, so it would seem like there'd be no reason to just, the bar closes, enter the trade. You know, take the trade, take the trade, take the trade, take the trade, or T3. Okay, don't think, everything looks great, enter the trade. Don't hang around because I shall end up entering there. Get in the trade. Trust your stop. So we enter the trade. There is T1 there. And that trade, entered when you should have entered, is a good 6 pips, plus 6. Good start to the day. Next signal. Next signal is here at, oops, clear this out of the road. Next signal is here at 512. Now, a couple of things to look at. You've already noticed, you should have already noticed that we have a flattening out of the trend. Okay, at this stage here, it can go this way or this way. So we need to be careful. Also, we're seeing here that even though the slope is in our direction, okay, it has come from, yeah, it's doing this, okay, it's doing that. So it is not exact, this is not the same as here. So it is, let's just say slow, or the momentum is not quick. But even withstanding that, oops, I did something there, let's move it there a bit. Where am I? Here it is. No, sorry, here it is, here, this one. Here we go, here we are, here. Okay, so we get the signal. We could possibly enter this trade. It is coming down. We need to be careful here. That tells me that I need to be careful with my stop. Okay, maybe I need to come down to break even, or near to break even, as quick as I can. Maybe I should not risk going to 85.4 if this trade goes against me. Now here we have T1, T2. So in this case here, it's probably not going to be a big trade. Down to T1, there's going to be 1.2 pips, down to say 3 pips there. At best, you would have made, say, a +2 at the best. It would have been foolish to have watched all that go back. So anyway, so let's say you had 6 plus 1. Let's just say it's 1. Say at a +7 or a +7.5. Let's cut it in half. Still not a bad start. next signal is here at 5:30. Now, irrespective of what we see here, I would not have taken this trade because I do not like that pattern. To me, the slope is that way, and even here, you know, I can't really determine what's going on there. So even though it still ended up in a good trade, and maybe you had taken the trade, I'm not sure, but I would not take that trade. Next signal is here at 625, and again, just purely based on what I see there, I would not have taken the trade. The next signal is here at 649. Now, 649, let me explain also, 6 on my chart, 6 a.m. on my chart is 12 noon Tokyo. So from say 6 to 7:30, these guys is having lunch. So we should expect, or could expect, that the market is going to be slow, may not be as volatile as other times. So important scale. Again, we just come back to scale. Maybe where you expected to make 5 pips, you're now going to make 2 pips or 3 pips. Okay, it's all about scale. So here we enter the trade here. This is all drawn for us. So here, everything looks good. Let me explain. Even here, this here looks okay. It looks consistent. Our cross here is, it's not been, it's recent. Again, we do have this tendency here where it's still, the trend still looks like it's going down, but everything else looks positive. So we could enter this trade with care, always with care. And so we're looking at maybe a +3. So we had 7 plus 3, or 7.5. So we're at 10.5. And if that was me, I'd have called it a day. But being you, you probably would have continued. What happens if we continue? Our next signal was here at 7, looks like 728. That looks good. Our primary slope is okay. We would have preferred more like that, but it's okay. The important thing here, I suppose, we have a very strong uptrend, so we could enter this trade. But we have this situation here where from the swing low to the next fractal was only a small distance. So very hard for you to decide where you're going to set your targets. It's very hard. I don't know where you'd set it. Maybe you would enter and maybe you could pull this up. Notice I can still pull this up if I want to. I can change it if I want to. And you could have done this and said, well, I just put it there, or say even here on the channel. Whatever you decide to do, I'm not sure how I'd handle that, but maybe I'd have done something like this, or maybe even, I don't know. Well, it's very hard. You're going to have to decide on something. Maybe just put it there. Okay, and then try and target 0, to give us something at least to aim for. So this trade here, maybe, let's just be optimistic and say, again, say 3 pips. There's no reason why you could not have got a nice +3 in there. So 10.5 and 3, and we're looking at about 13 pips so far. So looking like a very nice day already. Next one, here it is here, 7:59, it's 8, so that's 6 hours now on the charts. That looks good. Everything looks good there. We're still on this good uptrend. Our price has reacted with the occasion 40, which we like. It has come down near it. In this case, it crossed it. Here's our signal bar here. Our impulse waves drawn for us. So all we have to do is take the trade, take the trade, take the trade, take the trade. Enter the trade, and we're looking at around 0. So we're looking at, say, a 4.3. Top of that there is 4. So again, it did not quite reach the 0, but from there to there was 0.3 of a pip. Scale. We've got to keep scale in mind. Okay, are we just going to hang out for the 0.3 and watch the price go all the way back down here? Of course we're not. We're going to say, boy, that was close. It almost got there, and now we're going to get out of the trade. So you would have got out of the trade. I would have presumed that from there back down that may have been quite a quick move. So you may have got somewhere around there. So you may have got +3 or thereabouts, or 3.5. But we already had 13, so now we have 16. We come along here. Let me just get rid of this again. There we go. Next signal was here. Now here's where we're going to get caught at the end of a run. And sometimes it just happens like that. It was at, what have we got? Looks about 9:16, I think, or thereabouts. No, sorry, 8:16, was it? It's for me to read. 9:16 maybe, I'm not sure what it was. But here it is here. Our trend still looked like she was going up. Our slope looked great. One thing that probably did give it away for us was that we were on, the signal was on the wrong side of the occasion 40. Maybe that would have been a signal to say, hang on, let's be careful. I'm not sure. But everything else seemed to look okay, but it was the end of the run. So in this case, we would have entered. There was a gap, which may not have been helpful. So we're going to be looking at about a -3 or 3.5 pip loss. So there's our 85. We would have stopped out about there somewhere. So a -3.5. But as I said, if you had been watching your price action and maybe had been watching what this occasion 40 was doing, you may have realized, now hang on, we're on the wrong side of the occasion 40. So maybe we need to be careful that this might be the end of the run. The next signal, oops. Next signal was the bar that we would have been stopped out on. Now in this case here, we see that our secondary slope is still in the upward movement, but we've had this little flick of our primary showing a sell. Now, what we like to see is like this. That's what we want to see. We don't like this one fleck of colour. Remember, we're trying to take the very best signals that we can possibly take. So this would have been a no trade. The next signal was here at, get rid of the stuff again, next signal, and the last signal for the Asian session was here at 9:05. You can't quite see it here, but the primary is in behind there, and that was okay. This all looks good. We do have a yellow square there telling us that this bar here is between 3 and 4 pips. Many times when we get a long bar, especially a long bodied bar, a long body, it can retrace before moving up. So we want to give the next bar a moment or two to prove itself. So we don't, normally we say take the trade, take the trade, take the trade. We don't. We wait for a period of time, and you determine that period of time yourself, for the next bar to prove itself. So maybe you would not have got into this one here. Maybe you would have entered here somewhere, or even here, like this bar here, here, or here. So you would have still suffered a small retrace of maybe a 2 or 3 pip retrace. Our stop is never ever challenged, and we would have ended up around 4, or if you had to hang on, around 9 pips. So let's have a look here. Let me just have a look. So I can't remember what we had before. Was it 13 or 15 plus another 3? So that's 15 to 18 pips without taking any risks. We're taking the very best trades possible. Sometimes we also need to realize that a 0 day can be a good day. That 6 pips can be a good day. Okay? A plus day is better than a negative day. Okay? So sometimes we are going to have times where it's going to be very, very difficult to make our pips, but we don't worry about that. Sometimes we need to realize that even though we trade by the day, what matters is what we end up at the end of the week and at the end of a month. Okay, so anyway, that was the Asian session on September the 16th, a positive day.